This is Taking Stock on Bloomberg. I'm Pimm Fox. All right, so let's talk more about investing in gold. I was at the BMO Capital Markets Metals and Mining Conference in Hollywood, Florida on Monday, so I got a big dose of bullishness on gold. Let's find out more from our guest, Jeff Nichols. He is a senior economic advisor to Rosland Capital. Jeff, good to have you with us on Bloomberg.
Nice to be here, Pimm.
So go ahead, make the bull case for gold. I know you've been talking about, right, Asian countries as well as the consumers. Everyone wants gold, right?
You know, I'm probably one of the more bullish analysts out there these days, and I keep telling people it's not a bubble because it's built on real fundamentals. And one of those fundamentals, you're right, is the enormous pent-up demand in China. And actually strong demand throughout that whole region is likely to continue for the next few years. And even without some of the other drivers, it alone would be sufficient to push gold much higher, I think.
Let's talk about China just for a moment, because I know you got some details, right? One of the sovereign wealth funds in China?
Actually, the principal sovereign wealth fund, the China Investment Corporation, bought a few tons of gold earlier this year. And it's inconceivable to me that that would have happened without the blessing of the central bank. I think it, in a sense, endorses the idea of gold investment. And there's been other word from Chinese officials, actually in recent days, about the need for the central bank to accumulate gold slowly and at times when it sees fit to do so. So I think we're going to see private sector demand in China continue to grow. We're going to see official central bank demand grow, and we're going to see institutional demand in the form of the sovereign wealth fund and other Chinese institutions.
Jeff, does that play into your theme of the actual holders of gold are switching? In other words, you're getting stronger hands, meaning governments, meaning institutions, and the weaker hands, who are those? Who's
well,
actually
you know,
not...
I think since last December, when gold peaked and has been heading down in much of December and January, the sellers were principally sellers of derivative products, forwards, futures, options. They were traders, short-term speculators, institutional players who have no real allegiance to gold, but see it as part of the universe of instruments that they trade. And so that's where the selling was coming from. At the same time, the buying was coming largely from Asia, but also from retail investors here in the U.S. One of my clients, Rosland Capital, for example, if you were to walk into their trading room in the recent few weeks, the phone is ringing. You know, people are calling. There's strong interest.
in buying gold?
In buying gold, physical gold.
Talk a little bit more about that, this whole idea of whether you want to own the actual physical metal, or do you want to own gold mining shares, or do you want to maybe own ETFs, or maybe you want to own all of it. I don't know.
They're all different.
Yeah.
And the answer depends on the investor, except every investor, I think, should have a position to begin with in physical metal, a sort of core position, because that's the most risk-free form of owning gold. If you buy a mining share, you're not only getting exposure to gold, but you're getting exposure to all the risks that go into that mining company, the geology of its mines, the labor relations. Many of the mines are in foreign countries. Are those countries friendly to foreign investors or not? Is the management of the company savvy? Those are all things that you're investing in along with the price of gold. And those could go against you even if gold is going higher. Not every gold mine is a winner. So my advice to most investors is first have a physical position, probably in bullion coins, such as the American Eagle or the Canadian Maple Leaf. And then, after you've accumulated a 5 to 10% position in terms of your overall portfolio, then consider some of the alternatives, but not until you've done that.